Something a lot of sellers say when we're talking about listing their home for sale is, let's price it a little bit higher, that way we have room to negotiate. And on the surface, that sounds reasonable and actually quite logical. But when you look at what happened in the real estate market here in 2025 in Sarnia, that idea starts to fall apart pretty quickly. And the expired listings numbers tell that story way better than my opinion ever could. So let's start by painting the big picture. In Sarnia in 2025, we had 1,688 new residential sale listings come to the market. Now, that's a number that's higher than normal. The 5-year average is actually 1,493, so we're seeing more homes competing for attention than we used to. And at the same time, we had 919 sales. And remember, this is all just residential sale listings in the city of Sarnia. That number is pretty average for Sarnia, actually, nothing dramatic. Aside from 2021, this is more or less what a normal year would look like. So, what we have here is more homes for sale and about the same amount of buyers. And that tells you something about leverage already. But here's the number that really matters. In Sarnia in 2025, we had 1,735 expired listings. More homes expired than actually sold. And this wasn't a one-off year either. The number of expired listings have been climbing steadily for over the last 5 years. Back in 2021, there were around 1,200 expired listings. The 5-year average sits around 1,470. So 2025 didn't just continue the trend, it pushed it further. Which leads to the obvious question, why? Most people assume that the expired listings happen only because the market slowed, and that's only half true. Homes don't usually expire because the buyers disappear. They expire because the buyers looked and then decided to pass. And 9 out of 10 times, the reason is price. Not the condition, not the location, and not the marketing photos. The price relative to everything else that's available. Think of it like this. You walk into a grocery store, you see 2 cartons of eggs sitting there, one's $5 and one's $7. You don't take the $7 one and try and negotiate with it. You pass and you take the $5 one. And that's what we saw in the real estate market in 2025. And now here's where things get even more interesting. If you're interested in real estate, of course. In 2025, the average closing price to original list price ratio was around 96%. And historically in Sarnia, that number sits around 98 to 99%. Again, 2021 was the odd one out, where the average ratio was at 104% of list price. That was an exception, not a baseline. So what does that 96% mean? It means that buyers negotiated roughly 2% more off of the original list price than they normally do. On a $500,000 home, which is roughly the average in Sarnia right now, that's about $10,000 more given up during negotiations. And when you compare that to what sellers are used to historically, the total difference is closer to $20,000. Not because the buyers are being super aggressive, which sometimes they were, but because sellers started too high. Now this is where the room to negotiate idea starts quietly hurting people. When a home is priced above market value, one of 2 things happen. The best case is it sits longer than it should. The showings slow down, if they even happen. Buyers start wondering what's wrong with it, and the listing goes stale. Then eventually the price drops, but then the market's already moved. You're not negotiating with strength anymore, now you're chasing the market downward. And the worst case, it expires. All that time, effort, and stress with no results to show for it. And statistically speaking, homes that expire tend to sell later for way less than if they'd been priced correctly to begin with. That's not just a theory, that's the pattern. Not all sellers realize this, but the strongest moment your home will have on the market is in the first couple of weeks. That's when the serious buyers are watching closely, they're making comparisons, and the urgency still exists. And if the price is off during that window, even by a little bit, buyers don't negotiate, they move on in this market. Just like we saw in 2025, where they had way more listings to choose from and plenty of options. And for buyers, that 96% sale to list price ratio also mattered. There was room to negotiate, but only on the homes that were mispriced to begin with. The homes that were priced correctly right out of the gates and presented well, they still moved quickly, attracted a lot of attention, some even going into multiple offers. And the overpriced ones, well, those ones likely contributed to that 1,735 expired listings number. So when you zoom out and look at the bigger picture, the story becomes pretty clear. 2025 wasn't a bad market, it wasn't a broken market, it was a price-sensitive market. Accurate pricing didn't just help homes sell faster, it also protected their value. And overpricing, even slightly, increased the odds of sitting longer, negotiating harder, or not selling at all. If there's one big takeaway, it's this. Pricing isn't about optimism, it's not about leaving room to negotiate. Pricing is about positioning. Positioning your home as the obvious choice, not the one they'll wait on. Because the market data always gives us feedback, usually quietly, but through days on market, price reductions, and expired listings. And 2025 gave us a lot of feedback. So whether you're selling or buying or just watching the market in 2026, that's the lesson to be taken from 2025. More listings, average buyer demand, more expiries, and stronger negotiation powers for buyers, especially when pricing missed the mark. And if you want to dig deeper into how pricing works or just the entire buying and selling process, I have my guides linked below in the description. And if you want to talk about your specific scenario, you can book a call with me. The link for that is also there. Thanks for watching.